Howdy, Jacob here. Today we're looking at Commvault Systems in the software industry, 6.7 billion market cap, 6.4 billion enterprise value. They provide a platform that enhances cyber resiliency by protecting the data. So, cybersecurity, it sounds like. Growth has been much less than I thought. They were incorporated in 1996 and 608 million to 839 million. This is not what I was expecting. I don't know if they do exactly what a CrowdStrike or a Palo Alto does, but their growth is much, much less. It looks like their operating margins are also pretty low. We'll see what their free cash flow looks like, but massive gross margin. It is declining, however, but over 80% is still an impressive feat. Most recent year has an immense return on invested capital. We'll see what happens when the business starts to consistently make more money. So income statement should show some R&D spend, and we do see over double the investment in R&D from 10 years ago. So they are taking money away from today to hopefully get more into the future, and even still are making some very solid income here. So that net income jumped, but it looks like there was some net income write-offs that they were able to jump back on. So even if you look at $60 million, I guess $80 million is still just 10%. So those margins still aren't anything to brag about. But again, you do have maybe 15 to 20% of your revenue being invested in R&D. So the balance sheet has 313 cash on hand with no short-term debt, no long-term debt. And so we're definitely not worried with this balance sheet. It's a very cash-heavy debt, low balance sheet. Great production of free cash flow with capital expenditures near nothing. Just to keep the business lights on, it takes nothing to keep it open, that's basically what capital expenditures are supposed to be. They're supposed to be, how can I, in a lot of cases, they also put in like reinvestments. So if you buy like a plant that is expanding your manufacturing capabilities, that's going to be in this capital expenditures line. But a true capital expenditure is basically the business I have today. What does it take to keep it going into the future? No, like all else equal. And we see $4 million in CapEx with 200 million in cash from operations. So huge production of free cash flow, with the majority of their money going towards a little bit on acquisition, a little bit on reinvestment, and a heavy amount on share repurchases. So that's enough to get me to make some assumptions here. On the revenue growth side, we aren't looking at anything crazy, but I do think cybersecurity is immensely important and will be for the foreseeable future. So I think maybe 7% seems to make sense for me. If they can get more consistent, I think definitely a premium is worthy. And I'm going to put a little bit higher earnings than they've really had in the past, but that's because their free cash flow is consistently a lot higher. With a share change of 1% would be about 67 million. They need to buy back about 167 million to offset stock-based compensation, which is a heavy amount, maybe 80% of their free cash flow. But that's what they've done historically, and fine with that, because basically, if you dollar cost average into your company, you're just going to get what your business grows at. And if you grow at 7% in the long run, it's not horrendous. I'd rather them buy very cheap shares, but they're going to do what they do. And so for me right now, we're saying it needs to fall 74% before you get the return to look for here. I do think it's a great company. I think other companies have higher growth potential, but I do think that this is still a very solid company in a very solid industry, just one that seems a bit too expensive for me at the moment. Hope you enjoyed the video and have a great rest of your day. Thanks.